Back with you on the Market Day Report. Thanks for joining us today on a Tuesday. I'm Marlon Bowling with you. As we kick things off in this particular segment, I want to review the overnight export sales reported by USDA this morning. And a couple of them fairly significant, too. Take a look at this. 229,000 tons of corn were sold to Japan, and it was for next marketing year, 2017 and 2018. So it'll be a while before we have to deliver that. Over a quarter million, actually about a quarter million tons of corn sold just overnight to Japan. And then we had another sale as well. It was of soybeans to Mexico for the current marketing year, so they can deliver those pretty soon here. 142,500 tons of soybeans involved in that particular transaction. So a couple of good export sales reported overnight of U.S. corn and soybeans. Let's find out what's going on in the trading floor in Chicago by going there right now and visit with none other than Todd Bubba Horwitz of BubbaTrading.com. Kind of a weaker trend here last night, and that's carrying over into the daytime trade here. Todd, what's going on?
Good morning, Marlon. Well, I think it looks like we had a really nice rally at the end of last week. I think that I would expect to see some selling pressure. I would expect to see the beans come down to probably about 1040, and then we'll kind of see what the action is off of there. I would expect corn to go to 370 or 365, and I think wheat looks like it should probably head down to about 435, and then we'll see what kind of decision. I think the weakest out of the bunch is the beans. I think that they could be in real jeopardy if they break 1040. I think there's lower prices coming from there if they break down below 1040. But overall, it is still a quiet trade. It is still not very active, and there certainly is not very much volatility right now.
So how are the big commodity funds positioned right now? It sounds like maybe there's a little bit of jockeying around going on, where it sounded like they had a huge net long position in soybeans, for example. Then it sounded like they maybe got rid of about a third of those. Now it sounds like they may be acquiring them again.
Well, it's interesting you ask, because, depending on what report you look at, from the reports that I look at, I showed the big commercials short beans and short corn and long wheat. Okay, now there's others that are showing difference.
But you're talking commercials in this case.
Yes,
okay.
And I think the biggest thing to really watch, so Marlon, is watch the order flow and the money as it pushes markets up or down. I think that's a much better indication, because we don't know if somebody's making a big purchase. We don't know if they're covering a short position, if they're using it against some other position. So it's not always easy to know what the other party is doing with their position. So I'm always very leery of trying to guess what their information is and how they're going to use that. So I more like to watch order flow and watch how the markets trade. And the market showed us last week that they had a nice peak up. We looked for it. We talked last week that we looked for a rally. And now we're seeing a little bit of a pullback. And I think that's perfectly normal here and should be expected.
All right, let's take a peek at the futures to get everybody updated here. Let's go to the corn first. Right now, March corn currently down 1 3/4. We're at 373 3/4 right now, within a penny of our low of the day. And we have July down 1.5 pennies. New crop December down 1/2 cent at 3.99. And looking at the soybean trade that Todd was talking about, we have March down 9.5 at 1044 3/4 right now. Much closer to the low of the day than we are the high, that's for sure. We're about 12 cents or 11 cents off our earlier high. The July contract down 9 3/4 at 1064 even per bushel. Meanwhile, on the wheat trade right now, we have the Chicago March wheat down 4 3/4 cents at 447.5 per bushel. That's about a nickel off our earlier high. Right now, the July down 5 3/4. Kansas City wheat on the March is down 5 1/4 right now at 461.5. New crop July down 5 1/2 at 484 3/4. That's only one tick now from our low of the day. Let's go to Minneapolis here. Here's a look at our spring wheat trade. March down 4 1/2 at 566 1/4 right now, and the July down 4 1/4. A quick look at our cotton market here will reveal that the March contract is now down 48 points, and that active July contract down 42, but it's still at 78.63 per pound. We'll come back in a moment, and we'll talk more with Todd Bubba Horwitz about the livestock trade when we come back right after this. Come on back. Well, we're back with you, and we're talking right now with Todd Bubba Horwitz, BubbaTrading.com in Chicago. We're talking about our ag commodity trade here on a Tuesday, and we had a weaker tone in the grain segment here, that's for sure, all across the board. I want to take a look at our livestock trade here, Todd, and as we look at our live cattle futures right now, of course, we've been hit fairly hard in the cattle futures for, a couple of days where they really pushed them downward. The April contract, we'll start there on live cattle. Now, 6 higher at 112.58 per hundredweight. However, the other months a little bit weaker. June down 7 at 103.48, for example. Let's switch over to the feeder cattle trade. On the feeders, we have March. Let's go to the feeders. There we go. March down, now 58 higher, now 35 higher at 122.17. The April contract now 28 higher at 122.25 per hundredweight. And then you get weaker and weaker as you go further out in the months. So the April contract, for example, 28 higher now. That is basically about 40 cents off our low of the day. We've come off our high by 70 cents. So I wanted to get your reaction here on the chart patterns that we have seen now in the cattle recently. Some folks were ready to write the cattle off. Then it looked like maybe they might have another sign of life there. Now they're selling off a little bit on live cattle today. Where do we go from here?
Well, I think we've got some work to do on the downside, Marlon. Again, I'm bullish longer term, but I think here in the short term, we had such a big rally from the lows that I think you're looking to me, I'm looking for 110 to 108 as a spot to start accumulating again and start to buy for higher prices going forward. I think we've seen, we stretched them up a little bit too high, over the 120 level, and now I think we're going to come back. And of course, as always happens, we go a little bit too far to the upside or a little bit too far to the downside. I think that'll be the example here. We'll probably go down to that 108 level, and I think that's where you want to start to look to be a buyer. And I think in the feeders, I'm looking for under 120 as next move. We're down about $10 from the actual highs here, and I think those have a little bit of work. But again, longer term, I think we see higher prices. But in the short term, I think we're going to see some pressure here, and I think it's going to come pretty fast and furious once they decide to get it down here. I think you want to be a seller of rallies right now as a trader, and I think you just want to make sure that you're protected and make sure your opportunities are there when you're ready to go.
The August contract, I want to point this out, the August is at 99.75, so we're under the $100 benchmark there. It's the only month that is. Is that concerning to you or not?
Well, it's always concerning when we're in more of the backwardation, because it's saying that there may be some issues coming in down the road here. So I think that's always a little bit of a concern. It wouldn't make me, in the cattle markets, it's not as concerning as in some of the other commodities, but here it's a little bit of a concern. But I think we'll see how it plays out. But it does indicate that there may be some weakness coming. And I think we saw that last year. If we go back a year, we saw the same type of pattern develop where we were always in backwardation. And of course, we saw some pretty dramatic selling late in the year.
All right, I want to take a look at the lean hog trade here as well. Let's go to the lean hog futures. And right now on the big board, April now 90 higher at 70.60 per hundredweight. Got down and touched $70, but bounced right off of it. It's been as high as 71.08. The May contract now up 85 cents at 75.80. So a little bit of optimism showing up on the trading floor in the lean hog trade today as they push it upward a little bit. Todd, good to visit with you again. I appreciate the help.
Thanks, Marlon. Have a great day.
Todd, Bubba Horwitz, BubbaTrading.com. That is a terrific website. You need to check that out.